Hello, chart watchers and Decision Point faithful. Welcome to this Friday, January 18th Decision Point show with your host, Aaron Swenlin, and special guest again, Carl Swenlin. For those of you joining us for the first time today, we welcome you to the show. Hope you'll be coming back. And for our regulars, welcome back. All right, so let's get started and see what we got going on for the day. All right. Well, as you can see, we've got the daily and weekly charts. We're going to look at those with the large, mid, and small caps. Big four, we're going to look at, of course, that's the dollar, gold, oil, and bonds. And then we'll cover our decision point indicators, our climactic indicators, the Swenlin trading oscillators, and the ITBM and ITVM. And then as a bonus with Carl here, he's going to compare the PMO, PPO, MACD, and KST. So it'll be interesting to see how those match up against each other and the pluses and minuses of all of those. Dad, welcome back. Glad you're here.
Greetings.
So I didn't want to ignore you and just get into the show right away. So definitely glad to have you back, and hopefully we will see you next week as well. But today, since Carl is with us, he's going to actually go over the big four. So that'll be very interesting to see his charts there. All right, so let's start off with the decision point scoreboards, what's going on there. And as you can see, short term's looking pretty good. We've got the short-term trend models on buy signals. Of course, that means you have a positive 20-day EMA crossover. That's how those are generated. And then the PMO is above its signal line, and that's of course how you have a PMO buy signal. In the midterm, long term, our PMO signals are derived from the weekly and monthly charts, but the trend model signals are all on the daily chart. 5 20-day EMA crossovers, 20 50-day EMA crossovers, and then 50 200-day crossovers. I'll talk a little bit more about these neutral signals as we look at our decision point sector scoreboard. All right, so this week we did actually get a new buy signal, and that was in the healthcare area. And you can see that we already had long-term buy signals, and they are still in place for healthcare, real estate, and utilities. Now, many of you know from sector rotation that these are very defensive sectors, and you know, Tom and I have been talking on Market Watchers Live that if you start seeing the buy signals, if you start seeing the rally coming off the back of the defensive sectors, it's not necessarily a good thing. And it typically means you are in a bear market and to expect some downside. But at this point, you know, we did get that buy signal in healthcare, so that is positive, but we just have to temper our excitement a little bit on that. All right, so let's go and take a look at some charts because we have quite a few to look at here. All right, let's get right to it. Make that big. All right, so I'm going to start with the S&P 500's daily and then weekly charts, and then we'll pretty much kind of blow by the other three scoreboard indexes of the large caps because honestly, you're going to find that they all look very similar in the way that they're set up. And honestly, the mid caps and small caps also have a lot of similarities to the large caps. So I'll point out the major things that are going on with the S&P 500, and then I'll probably be referring back to that throughout the show. So the first thing I wanted to mention is we do have a PMO buy signal that of course is in play. PMO is still negative, in negative territory, but it is rising nicely. And you know, with this rally, we are seeing the right things out of the unbalanced volume. We want to see those rising bottoms in line with the rising price bottoms. At this point, the main things I'm watching for is this declining tops trend line. You know, it would technically take us out of the declining trend if we manage to get back up there. I don't think it's going to be the saving grace necessarily, mainly because I don't think we're going to get past it. And if we do, it would only be a little bit. And the reason being, you know, a lot of us are pointing out this rising wedge. I think it's getting a little too mature, but that declining or the rising bottoms trend line is so steep. What do you think, Carl?
I think that that's one of the things that will doom something, you know, a price index is traveling that steeply. So just by default, it ought to break down at some point, but that doesn't mean that the trend is going to end. It could be just a little pullback. And one thing on this chart that I wanted to point out is the PMO bottom. It was really half-hearted, and actually it bottomed and then topped below the signal line, and that's usually a pretty scary event.
Yeah.
But so you really didn't get a good green flag on that. Whereas you look at the one that the bottom PMO bottom in October, it's nice and clean and smooth.
Mm-hmm.
But so when I see a bottom like we just had, it just confuses me. That's all.
Well, and honestly, it's just going to be really difficult for the market to sustain this kind of acceleration upward, this angle of descent. I mean, this is an angle we don't generally see, even in a nice bull market. It seems like a lot of energy, off of the bottom that we had, has just propelled things upward. But, declining tops is coming up. I think you did mention it, was it last week, about the things that could propel price above this area, above the 2,600 area.
Right. Let's see, it was Wednesday. Actually, on Thursday, it looked to me like that it was going to top, and then that news came out. Last week's DP weekly wrap, I said there are two things offhand that I can think of that fundamental events that will knock the technicals off the stool for a while, and that was some kind of resolution on the trade deal and resolution on the government shutdown. And we got one of them on Thursday, and it's not a complete resolution. They don't have a deal, but it looks more promising at this point. That's all you could say.
Right.
So we could hear something next week that makes people, run.
Right. And then we were talking before the show. I mean, yesterday it did try to break down. I mean, you could see it.
Yes, it did peak down, and it was just ready to go. And then they came out with that. Was actually a rumor that we were close to a deal that would raise the tariffs, or that would have them remove the tariffs.
Yeah, it sounds like the crash prevention team, right?
Well, there's something came out from the Chinese today that they have come up with a plan of how to get rid of the trade deficit, but it'll over time. So it's something that they're working with us.
Mm-hmm.
But again, this is news that can change tomorrow.
Oh yeah, of course. As we know, it's been volatile, and it seems like a lot of things are the market's sensitive to things a little bit more than usual. We did get on our weekly chart, you're going to notice with the large caps and the mid and small caps, we did get PMO bottoms on the weekly charts. Of course, we're very far from the possibility of a buy signal at this point, and we are still in negative territory, but a bottom in oversold territory is generally considered a good thing, but I don't know. Not this time, I don't think. Let's go ahead and look at the Dow's daily chart. And again, all of these, you're going to see similarities. You can see the buy signals. You can see the rising OBV. In the case of the Dow, it's got a little bit further to go as far as reaching that declining tops trend line. I did not draw in that rising bottoms trend line, but I think it's pretty clear just visually that how steep it is. And it's just going to be very difficult to maintain that. And here is the weekly chart. Again, PMO bottom turning up. You can see declining tops and again, not reaching it just yet. I drew a rising bottoms trend line from the 2016 lows, and you can see we're getting ready to hit that as well. So between the two, we could actually be looking at some pretty strong resistance level for it to get over. NASDAQ, similar. There's your rising wedge. The wedge is a little less complete. I mean, it's not as mature in that we're not quite to the apex yet. So I think a breakdown from this wedge would be, you know, something that we'll watch for. It's not going to happen with a drift more than likely, which is the problem I have with the one that's on the S&P chart. Most important really is that rising bottoms trend line. Now, looking at the NASDAQ 100 weekly chart, though, we did peak up just a little bit above that declining tops trend line. And again, we have a PMO bottoming.
I think that breakout above that declining trend line could be a trap. I mean,
Oh, yeah.
It's something that I'm looking for. You're going to get a breakout, and everybody's going to say, it's time to buy.
Right.
And then that'll be the trap.
Exactly. Everybody's going to be ready to get back in. All right, let's look at we looked at the S&P. Let's go into the 400 and the 600, and then we can both look at those indicators real quick. All right, so like I said, 600, S&P 400 and 600 also look very much like the large caps, so I don't feel like I need to get too in detail here. The buy signals, rising OBV. We did get above this shorter term resistance level where we had the low back here in November. But we are getting ready to hit some pretty powerful overhead resistance at about 190. That's the level I'm really watching for. Of course, if you did draw that declining tops trend line, which I should have but didn't, you'd probably see a little bit of a breakout or we'd be right up against it. So I will update that because all of these charts you're looking at are in the DP chart gallery. Actually, no, they're in the DecisionPoint live chart list. Just go to the DecisionPoint blog and the link is right there at the top. And you'll see these charts exactly with the annotations. All right, bottom for the S&P 400 on the weekly chart as well. Russell 2000. Here we are. Again, very similar chart. We did break out above that November low. Next area of overhead resistance, I would say, is going to be at that November-December top, right around that 154 area. So that's where I'd be watching as far as the Russell 2000 ETF IWM. All right, let's look at a few indicators. All right. So what we generally look for here are the climactic readings. That's what we're looking for. Things that are, spikes in the breadth or in what we're seeing on the advanced declines. And then of course I like to look at the VIX. This is an inverted scale because the lower readings, people are feeling bullish. To me, that is bullish sentiment being contrarian. Typically you're going to look for a downturn when the VIX gets very low. I notice we are still seeing some low readings here, but we are starting to top out just a little bit here on the VIX. So we may not actually have to get all the way up to puncture that upper band before we see the market falling. And right now, these look very much like a possible buying exhaustion. And the reason I say it is because we're getting them rising here and it's coming off of this rally. And typically when you get those really big readings at the end, that's the sign of the exhaustion and you'll usually see it fall. So when I get the climactic readings, I look at what's happened a few days before and look at those readings as well to determine if it's an initiation or an exhaustion. Are you seeing similar on this chart?
Hopefully I'm sorry about what?
Do you see a possible buying exhaustion on this chart? Like
one of the things I'm looking at is the VIX, and this display we use with the log scale and it inverted, it basically gives us a really end the Bollinger Bands. It gives us a nice overbought, oversold chart, indicator. Mm-hmm. And right now, it's failing to reach the top Bollinger Band. And
that's what happened back here.
Yeah.
Oh, there it is.
Right. I think we could have climaxed today.
It'll yes. Next week I actually thought we'd go lower this week. I guess it's going to be postponed maybe to next week. Well, we'll see. All right, we broke up, these are the short-term indicators. They have been very overbought. They had turned down and were actually, pretty much accelerating downward. But the last 2 days, and actually, yeah, yesterday, I think they didn't turn up. This one had, the STOV had, but we hadn't gotten it in the S2OB, and now we have both of them turning up in pretty much overbought territory, I would say. So if we're going to get a little bit more out of it, I just don't see there being a lot more just because we're so overbought on those STOB and V. All right, intermediate term. Whoops, I don't want to go there. Right. Hello. All right, there's the intermediate term. These have been acting very bullishly, and they have really, we got the signal back here earlier in January. And, I saw that, but I had very, we had overbought short-term indicators. I wish I had taken a little bit more heed here, because I think that when we got that crossover, it was signaling that we might get some, follow through here off of the bottom when we got that move up. And so, at this point, though, I would be looking at them as overbought. I think if we start seeing any kind of deceleration, it's going to be in overbought territory. And that's what I'm looking for right now. It's just,
Yeah, I agree.
Yeah. Okay, you're up. Let's go to your list here. I have that right. VP showed. It must be this one. It says 11, but it's 01. There we go. Okay.
Okay, so the US dollar, we can see one of the famous rising wedge formations, and it broke down like we expected to. Now, once it does break down, we don't really have any downside projection. Once it breaks down, it has fulfilled the prediction. And as you've noticed, the PMO has bottomed and it's rallying again.
Mm-hmm.
So it's looking kind of positive right now.
Yeah, it actually is. And, one of the rule of thumbs is that with wedges, I mean, it's not unlike a flag or a head and shoulders, measurements, that sort of thing. Arthur Hill, I think, was the one who told me about it. But if you measure the back end, that difference, that would be the measurement. I think that would be too much this time around. I think if you started here, that would be reasonable, but we didn't even have to do that. So I think, and with the PMO bottoming, I think that's certainly bullish. And there's the weekly.
And here again, the same structure. And the PMO is negative, but it's starting to decelerate. So I'm not looking for too much negative out of this, out of the dollar.
All right. And
gold. Last week I talked about a mini parabolic, and it just, when this price starts getting kind of steep, and you just want to, you expect that it's probably not going to keep doing that. It's going to break down somewhat. In this case, and it's certainly not a major issue. It's just one of those things that you can use as a guide to say, well, maybe it's getting too steep, and I'll better be prepared for something on the downside. And we've got a PMO sell signal, and we've got we're still sitting on the 1280 support, but I'm thinking a pullback might go as far as 1260 just for starters. But let's go to the weekly. And this is, looking really very positive. And for one thing, that raising trend channel I drew, that was looking, I was interpreting it as a reverse flag, a bearish formation, but the breakout went upside, so now we're definitely looking bullish. PMO looks good.
Yeah, and honestly, if you look in the thumbnail, now we might be forming a bull flag in the shorter term.
Yeah, that's possible. I think it's going to pull back some because gold is still stingy in terms of from the upside.
All righty. Next up is USO.
Here we go. A falling wedge formation and a nice breakout, and it's certainly looking bullish with the PMO just kind of going straight and smooth up the upside. We just got another breakout today. Let's go to the weekly.
Okay.
And I like to put the crude oil along with USO just so we have an idea. Mostly we don't hear about USO on the ticker on the screen. We usually see how much per dollar for crude, how many dollars per barrel. So right now, it's got a PMO bottom, and I believe that we've got a good uptrend started.
Yeah. And if we get that breakout, if it just goes even a little higher, we'll get the breakout. So, all righty, TLT.
Okay. I think that bonds have had their rally, and I think we're going to see some pulling back. Certainly, we've broken down through that support line. You see the next support right at there, about 119. Let's see the weekly. And notice that the last 2.5 years, it's been moving sideways. And we've got, I don't know how many crossovers in there. I think about 6 EMA upside and downside crossovers. It's moving sideways and getting whipsaw. Notice that the PMO is starting to top there too.
All righty. And our last bonus piece, we have plenty of time to discuss it, so let's go to it.
Right.
And here we go. Do you want me to skinny it up so we see more of them? I'm thinking I might want to, just a little.
I'd rather
okay.
Skinny it up.
Okay.
Because it's easier to see what I'm talking about when we see them with a broader scale.
Okay.
Basically, I started noticing that these 4 indicators look a lot alike, and there are other indicators that appear to be, have a similar shape and movement, and that are for different time frames. But these, this is the monthly scale, and I wanted to wonder, well, which of these is going to be the best performer? For one thing, I'm rooting for the PMO because I invented it, but so I look at that and it's very smooth, and it doesn't have a lot of whipsaw signals, the crossovers. And you look at the PPO, and you can see there have been a lot of whipsaws on that one. Just recently on 2018, you can see on the thumbnail chart, you can see where it did dip and give us a whipsaw signal. The MACD, similar problems in terms of whipsaw, but not quite as bad as the PPO. You notice that they're in what happened?
Oh, can you see?
Well, anyway, let's go to the KST. Now, the KST is the smoothest of them all. Yet one of the things that you'll notice is that, that when it tops or bottoms, it's delayed compared to the other three. It's a obviously designed to be smooth. The smoother you get something, the slower the turns are. So I've never used the KST, and it looks like, you know, a good indicator. That just be aware of the properties that that these indicators have and how they perform, behave, and to see if they suit your needs. And that's really what it gets down to.
Mm-hmm.
But obviously the winner is the PMO.
Yeah, and even in the divergences, they're a little bit different too, you know.
Yes.
Some similarities, but, you know, right here, we had a declining, you know, this one was somewhat rising, the PPO, a little bit rising here, definitely rising. So that was interesting in that we had the PMO was moving downward, at least as far as the tops. So that's kind of a different thing. And then, you know, the signals, just having fewer signals is always
Right.
helpful.
It's just, it's essentially as fast as the MACD and the PPO, but it's smoother.
Yeah, exactly. So we think the winner is the PMO, but you know, everyone has what they like to use. So I know a lot of you out there use the PMO, and we thank you. If you're watching this show, you more than likely do. I don't know. This is great. I'm so glad that you were able to come on today and, you know, go over the big four and then cover this great bonus information. Hopefully we can get you back here regularly. We'll try anyway.
Is there a minute left?
Yes, go for it.
One of the things I wanted to bring up was that one of the things I look for in rallies, or actually either way, but is to see how small caps are going against the big caps. Mm-hmm. And the small caps are actually, Russell is up plus 17%, and versus 14% for SPY. So this is a positive thing, because on a healthy market, the small caps will do well versus the big caps. It's when the small caps start stalling and slowing down is when you start looking for problems.
Excellent. Well, again, been great to have you here. I also want to thank all of you for being here with us today. Please remember, if you can, to complete that survey as you exit. We like to know what you think about the show. We'd like to get that feedback. And remember, come on back next Friday at 4:30 p.m. Eastern Time, 1:30 p.m. Pacific Time for more of Decision Point. Happy trading.